Welcome back. Time now for the financial week. Jamaicans are being told to brace for an increase in food prices. It follows a warning from the Bank of Jamaica BOJ indicating that inflation is expected to rise in the short term, up from the 2.9% recorded in October. The central bank attributes the projected movement on hurricane damage to farms and other manufacturing facilities in the major food-producing parishes. Additionally, the BOJ says post-hurricane recovery spending, both by citizens and the government, along with a possible rise in remittance inflows, could also contribute to higher inflation.
This is a result of demand outstripping supply, causing prices to rise. There is also the possibility of second-round price increases on other goods and services, including personal care items, routine household maintenance, transport, and energy.
The hurricane has disproportionately affected the poor and other vulnerable Jamaicans. A prolonged period of high inflation would have the harshest impact on those groups and slow the country's overall economic recovery. For these reasons, the BOJ says it's committed to limiting post-hurricane price increases and returning inflation to the target range of 4 to 6% as quickly as possible. To some news now on the stock market. The JSE index advanced by 2,813 points, while the junior market index advanced by 48 points. The winners were led by One-on-One Educational Services, Sterling Investments US dollar shares, Jamaica Stock Exchange, Caribbean Producers Jamaica, and Productive Business Solutions US dollar shares. The losers include Margaritaville Turks, Cygnus Real Estate Financial, ISP Finance Services, JMMB Group 7.15%, and Jetcon Corporation, 19 stocks traded firm. Foreign exchange trading ended with banks and cambios selling the US dollar for an average $161.20. The Canadian dollar is being sold for $115.07. The pound is going for $214.05, while the euro is selling for an average $189.46. And that's the financial week, international news, and bite of the week after the break.